Wednesday, May 11th, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at silver. Yes, there must be a lot of people there out there disappointed with the price action in silver. But we're going to look at what I think is happening in silver and what the selling in the paper market will do to the real physical market. Before I start, though, I like to say that being a contrarian, that this is probably the best time, if you still believe in the precious metals, gold and silver story, which I do, of course. Nothing's changed, and we're going to quickly look at that today. I think it's still probably the best time to buy physical gold and silver, especially silver. It's a time when you're disgusted with what's going on. That's usually the best time, not when it's rising and everyone is euphoric. Many of you, of course, have asked me many times, where can I get gold and silver? So the first thing is that I say to people is to do their homework, to shop around, get the best deal, talk to the most reputable dealers as well. But I do have a relationship with a couple of companies. One is Gold Investments, where you can get physical gold and silver, and they'll match the price of any dealer in the UK. You get a 0.5% discount off the offer price if you use my promo code Monaco64. The other one is more to do with just gold, and it's called Glint. Glint is an app, the GlintPay app. They are not just in the UK, but in the US as well, in the EU. They have been there, but they're waiting for approval because of Brexit to resume opening new accounts. Existing accounts are still there. And Glint basically allows you to buy gold and have it stored in an allocated account in a vault in Switzerland, a Brinks vault in Switzerland. And they provide you also with a debit card, a MasterCard. So that's Glint. My referral code for Glint is MarioGlint79. And all the details of how to get in touch with Gold Investments and Glint are below in the description of this video. Billy's moving around. We're a little early today because we have BT engineers coming to upgrade the Wi-Fi. Not that it's bad, but if it can be better, it should help. So back to silver. Am I getting rid of some of my silver? Here I've got a Wall Street silver coin that I got from Jim Lewis. He sent that for Christmas, which was very nice of him. Here I've got a 1 ounce Eagle coin. I've got someone else send me and the Fed, Den of Thieves, a 1 ounce silver bar. I've also got a Britannia. And for those of you who are involved in silver but have never bought an actual bar or coin, you are missing out, I think. And why am I talking about this? Well, because I think when you're just along the paper, it's very easy to get rid of it. It's when you buy the real thing that you realize how precious silver is, and how it's just money, really. It's been money for thousands of years. Up until the 1960s, people were still using these all around the world as money and change. And very valuable for that matter. And it provided privacy and it allowed people not to have to be in the banking system. So that's still the reason that I think silver is the place to be. But then again, I'm old-fashioned and I'm patient. I've been stacking silver since 2003. Started with gold in 2002. So what's going on in the paper markets or the financial markets? It's difficult to say. There are short-term moves that are difficult to forecast, but in the long term, I don't see anything improving in terms of the soundness of the currencies that we're forced to use. And why is that? Well, because the central bankers, if they really wanted to go back to a sound currency, for example, to unwind the inflation that we've had since the great financial crisis, for example, the Federal Reserve would have to get rid of about, let's say, $8 trillion of assets to go back to the pre-2008 balance sheet level, which was around $800 billion, maybe to just under $1 trillion. And right now, we're almost at 9. Could you really see the Fed being able to do that without causing a major collapse of everything? And even if they did that, the fiat currency that we have would be completely destroyed. The economy would be destroyed. Businesses would be destroyed. And financial investments would be destroyed. And the only thing standing would be still silver and gold because they're not in the system. There's no counterparty risk. It's not an IOU. So, yeah. Back to silver, yes, I think these prices that we're seeing is going to cause more and more shortages in the retail, even wholesale market for the real thing, for physical silver. It will mean even higher premiums, and it's going to make sure that eventually when silver does break out, the silver price, it will really break out even more because of this spring effect, coiling spring that we're seeing for almost 2 years, where silver's been between 20 and 28 or 21. Could silver go a lot lower? I saw a lot of people saying, oh, silver's going to the teens. Anything is possible, but I remember actually trying to buy some silver back in March 2020, the day we went below 12, and I was only able to buy 6 or 7 ounces from Gold Investments. It was almost impossible to get the real thing, and I think we're very close to that point. And it only lasts a day or two, maybe even a few hours, and it usually happens overnight in London while the US is asleep. And then the silver price just goes up again very quickly. So that's what I think is happening anyway. And today is an interesting day. Of course, we've got the CPI out later on in the US, coming out at 8:30 Eastern time. That's expected to drop from 8.5 to 8.1. But earlier today, we had a Chinese CPI. Even in China, CPI is very high. It was supposed to drop from 8.3 to 7.7, but it came out at 8%. And also yesterday, with the markets getting pretty topsy-turvy and stocks and bonds really melting down, we had Fed speakers and they came and they gave the market a little bit of a bone, and they were able to drive the 10-year yield below 3% because it'd been up to almost 3.2 at the beginning of the week. So as you see here, Fed speak saves stocks ahead of CPI scare, bond yields tumble. So that's why I don't see the Fed taking away the whole, emptying the whole punch bowl, so to speak. They're just going to take a little bit out of the punch bowl, try to slow things down. They think that destroying demand, that's what people are talking about now, destroying demand, it's going to, they think they're going to destroy demand, but people still going to need things to survive. the problem with the economy is not that it's strong. The problem right now is that there's too much credit. The economy is weak because people are not producing anything anymore. So they're just buying, borrowing and buying. And I've seen articles that, as you can see here, mortgage drive increase in household debt to nearly 16 trillion. Credit card balances stand 71 billion higher than a year ago. But New York Fed says borrowers are in very good shape. So this is crazy what's going on. This is why the economy isn't strong, it's weak. But the Fed is allowing people to borrow and spend without earning it. And that's the problem. And that's why by raising rates a little bit, and now they're starting to talk about the fact that they might not even have to go to the neutral rate, which is around 2.5–3%. And I don't think they will be able to. So it says here, a Fed speak fest today, that was yesterday, offered just enough hope that a pivot is possible. As Williams said, 50 basis points hikes are base case. Not sure if need to raise rates above neutral. There you go. Barking optimistically echoed that and said it will take time to get inflation down. Need not create deep recession. Bostich reaffirmed strong and steady, hiking at 50 basis point per meeting. And Waller proclaimed that this was not a shock and awe Volcker movement. So they're trying to already placate the markets, and there's no way they're gonna rein in the inflation. And that's another reason why commodities, gold and silver, are still the place to be. I guess if you can't handle the volatility, then you should stick to cash. Well, technically it's cash or Federal Reserve notes. And actually, tomorrow I'm going to be interviewing someone quite interesting to talk about that, because some of you might want some cash, and I don't blame you. And but personally, I try to avoid it. But I'm going to speak to someone about I-bonds in the U.S. and they're an interesting place to be in cash, I would say. So now let's quickly look at where the markets are this morning. Yes, I did say it was very early. It's 20 to 7 a.m. London time. We've got spot gold at 1837. It's down about $1. Our range has been 1840 to 1831.80. Silver's at 2147, up 21 cents or 1%. Range has been 2155 to 2122. The Dow futures up 81, Nasdaq is up 100, S&P 500 is up 16, FTSE's up 31. To the currencies now, sterling is up 0.2%, 123.35. The euro as well, 0.2 higher, 105.45. The dollar is down 0.1% versus the yen at 130.30. Dollar is down slightly versus the yuan at 674. And the dollar is down 1/8 versus the Swiss franc at 99.42. Aussie dollar is up 1/3%, 69.60. And the dollar is down slightly versus the Canadian, just above 130. And the Kiwi dollar is up 1/3 at 63.07. To the general commodities, WTI crude is up 2.2% at 100.86. Brent is up the same at 104.13. High-grade copper is up 1.5% at 421.58. And nat gas is up 1.6%, U.S. nat gas at 75.31. To the bond market, U.S. Treasury 10-year yield is down just over 1 basis point at 2.98%. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.